Greetings, we are back with another installment of our quarterly update. I don't know about you, but I've certainly felt and seen the pinch of changes in inflation every time I look at one of my till slips. In the light of the rising cost of living and the South African Reserve Bank's efforts to curb inflation, let's see how cash and income solutions navigated the current economic environment in the past quarter. Our first cash and income solution is the Momentum Money Market Fund. The fund invests in short-term fixed income instruments issued by banks, SA government, SA corporates with a maximum of 13 months. That's the maximum term to maturity. In the second quarter of 2023, the fund returned 2.04%. This is higher than the 1.23 return of the first quarter of 2023. This increase reflects the active positioning of the fund, which included the use of floating rate instruments, thus allowing the positive impact from the interest rate hikes to be quickly reflected in portfolio yields. Depicted are the fund's returns relative to its benchmark and peers over various periods. The figures show that our strategy has proven beneficial to our clients as the fund has outperformed the benchmark and the peer average across all periods. Our second cash and income solution is the Momentum Enhanced Yield Fund. The Enhanced Yield Fund retains many of the characteristics of a typical money market fund but has a wider investable securities universe. Similar to the money market fund, our positioning in floating rate instruments allowed the portfolio to participate in the interest rate trajectory, and our position in fixed rate instruments allowed us to lock in higher yields from instruments that were mispriced. As seen on the screen, the Momentum Enhanced Yield has outperformed the benchmark for the quarter ending June 2023, as well as for the 1, 3, and 5-year periods. The fund also outperformed its peer group for 3 of the 4 periods, and it performed on par with its peer group in the 3-year period. Lastly, we have the Momentum Flexible Income Fund, our flagship income fund. The Flexible Income Fund is an income portfolio that derives return opportunities from multiple sources of fixed income assets across the entire fixed income landscape. Currently, the Flexible Income Fund is largely exposed to government bonds, but also has allocations to inflation-linked bonds, property, and cash. Fixed income instruments had a difficult time, particularly in the month of May. Several factors, such as claims from the US that SA has been providing Russia with weapons against the war with Ukraine, and our government sending mixed messages regarding the country's participation in the International Criminal Court after an arrest was issued for the Russian president, causing the rand to sell off significantly and bonds followed. In addition, Eskom came out with the notification that load shedding would be worse in winter, which impacted the growth outlook due to concerns around the fiscus. This has put further pressure on the bond market as the budget deficit was expected to deteriorate, which would result in the National Treasury issuing more government bonds. Furthermore, inflation-linked bonds and property were not spared, both with negative returns in May. This goes to show how tough the fixed income landscape has been over the past quarter. Subsequently, we reduced our nominal bond holdings and increased exposure to shorter date inflation-linked bonds where the valuations looked attractive. Furthermore, we also bought 1-year cash instruments to lock in some of the elevated yields that are presenting in the money market space. As depicted, the Momentum Flexible Income Fund performed below its inflation-linked benchmark in the previous quarter. However, we are still finding opportunity within the fixed income landscape, so it isn't all doom and gloom for the fund, as the 6-month, 1-year, 3-year figures we see the fund keeping up with the benchmark, its peers, and in several instances outperforming the benchmark and the peer average returns. To conclude, on the screen is a visual representation of the power of income. Income has had a strong track record over the years. The chart shows how much the income component of the all-share bond index contributed to its returns compared to its capital component. Despite capital volatility, income yields remain a positive contributor to clients' return profiles. While we know that past performance isn't an indicator of future performance, we believe that income will continue to bolster returns. Our aim with each of the funds in our cash and income range remains to cater to your clients' liquidity, capital preservation, and income needs across the investment horizon and risk tolerance spectrums. While we have shown to be steadily navigating the current economic environment, it is important to remember that all the information presented should be seen in the context of the investor's overall investment plan and time horizon, and not as a market timing or asset allocation decision.